A lot to talk about today, guys, including just yesterday we had J.P. Morgan's Dubravos Lacko saying he remains very positive on equities, actually giving us a forecast for the S&P to reach 4,700 by the end of the year, about a 6% upside from where we are right now. On the other hand, Jim Cramer, living up to that nickname Jimmy Chill, saying there's nothing exciting about the markets. And then we have the professor, Jeremy Siegel, saying we're kind of in the 8th inning. We're headed towards a correction, but there's still more room to run. I want to toss things over to you guys. Doesn't look like anybody's told the markets there's more room to run. Every S&P sector in the red. In all fairness, consumer discretionary almost flat. I'm going to start things off with you, Farmer Jim. Where do you see the opportunities for your money right now?
Well, thank you. I mean, this is a great discussion that we've been having all week, and you set it up nicely. Part of the discussion from this week, including Jim Cramer, was the idea that the market can't rally unless the FANG names, which are about 23% of the S&P 500, rally with it. And I haven't had a chance, I haven't been on to say this, but that's just not true. We saw last year, from October of last year to May of this year, that cyclicals rallied and the market went up while Apple and Amazon languished, and we're down at some points about 15%. So that's actually something I think you could see happen in the near future, that cyclicals, which have been beaten down very badly since May, take the baton from FANG and lead the market higher. For that to happen, though, you have to have the delta surge end. And here's where it gets a little bit tricky, because there's no catalyst for that. Last year at this time, there was a catalyst in vaccines coming out. You're not likely to have that sort of catalyst. What you're likely to have is an easing of the negative catalysts. What do I mean by that? You could see supply chain shortages start to gradually ease. That would take the form of GM and Ford not announcing any more plant closures. You could see the port backlog at Long Beach and Los Angeles start to ease. You could see the caseload of Delta go down nationally and globally. Those are the sort of things that I mean. So there could be no catalyst. It could just be an absence of negatives that allows the cyclicals / value stocks to take over the baton, as they did last year, from the FANG GARPy names.
You know, Jim, just to hit your point about the easing of those negative catalysts, I actually think the ships in anchor at the Port of Los Angeles, they've actually increased this week, according to a note from Citi, I believe, from 49 earlier this week to 53 now. But let's talk more about positive catalysts. Brenda, over to you. Are there any positive catalysts that will keep this record rally going?
Well, I think I'll just echo some of Jim's comments in that we are in this period of increased uncertainty. We don't have certainty about whether, these inflationary pressures are transitory or not. We don't have a lot of clarity on when the Delta variant will have run its course. We also have a lot of now news out of Washington that creates even more uncertainty there. So I think we're going to muddle through, honestly, until we get a little bit more clarity on any of these items. And I think all it would take is certainly, to Jim's point, some of the supply chain problems beginning to alleviate, which, as you mentioned earlier, it's not happening now. So it's going to take a little bit of time for that to start to get a little bit better. And then on top of that, seeing how the Delta variant ultimately works its way through the United States, and whether or not we see some alleviation there. But the numbers today were pretty encouraging on the retail sales side. Certainly people are still spending, and there's still areas of pockets of growth. Like if you look at an Amazon, for example, the stock hasn't done much of anything for the last year, and non-store retail was really strong this last month. So I think there are still some areas of opportunity within the market where we could see rotation into those areas, and that could continue to drive the market higher, or at least stay in a flat range that we've seen it stay in more recently.
I think we can all agree the Delta variant, that remains the ultimate wild card for the markets. Josh Brown, over to you. Do you see any positive catalysts coming, or any signs that the negative ones, as Jim referred them to, those negative catalysts will ease?
So thanks, Frank. I appreciate the question. I want to answer a different question that you didn't ask me, but only because I think it's going to be really helpful for the viewers. There are a bunch of warning signs piling up in the market right now for that market-wide correction that we've all been saying we're hoping for, or we expect, or whatever. The S&P, the index itself, is only 2.2% off its highs. But there is this situation we're back in where only 45% of S&P 500 stocks are still above their 50-day. And that is the lowest level since July. So you do have another one of these stealth corrections under the surface. They've been happening for the last couple of years. They're very normal. We typically get through them when they resolve to the upside. And usually it's the best acting names that get hit last. And that might end up being the case. And that's how you get an S&P correction, not just a stealth correction beneath the surface. So you're seeing the targets, the Costco's starting to give a little bit back. They're up so much. The overall market is still up 18% year to date. Still looks great. Google and Microsoft still hanging near highs. Those are very important stocks. Apple and Amazon look a little bit worse, but not terrible. So you've got that situation happening. And then some of the more severe stuff is happening in the materials and in the industrials. The precious metals are getting choke slammed. Because now the inflation data is cooling off and nobody made any money there. So you see SLV down 4%, GLD down 2%. So that's kind of like my read on the situation. The stealth correction is okay. We've been through them before. But I think the bigger picture here, late summer, early fall, is that none of this stuff is really important. Everything important that's going on is happening away from the markets. It's happening in venture-backed startups. It's happening in cryptocurrency. That's really where the fireworks are, where all the activity is. And I just want to share a couple of things to wrap up here that I think people should keep in mind. We've seen $156 billion in just the second quarter of this year go into startup funding. That is an all-time record for the ages. $156 billion in 90 days. Going into stocks that don't even trade on the exchanges. Corporate venture funding is even more explosive. It's doubled from the fourth quarter of last year to now. 1,140 deals funded by corporations to the tune of about $45 billion in the last quarter. And that's up from an average of like $15 billion in all prior years. So
Josh, let me jump in here for a second.
Explosive
I don't want to
stuff.
interrupt your
It's
train of
just
thought.
not in the publicly traded market.